if it's not looking good, if you're uncomfortable, you need help, ask. And that is the biggest mistake that people are having right now, is that they're scared to one, sell because they feel like they failed. Guess what I'm doing? I'm selling. You said you're selling. That doesn't mean you failed. You're going to reallocate that. Here's one of the things too about selling. So people are like, Danielle, why are you selling? Let me tell you why I'm selling. There's a number of reasons why, but let me give you a simple answer. Why would I not?
Good. Is it afternoon? Yeah, it's almost afternoon now. Good afternoon, Danielle Chiasson.
Hey, Gary. How's it going?
Good. Did I pronounce your last name correctly?
Chiasson is good.
Chiasson? Yeah?
Chiasson.
Okay. French, right?
It is French.
Yeah?
Chiasson is how you say it in French.
Chiasson.
Chiasson.
Okay.
Yeah.
How are you doing today? You're looking beautiful.
Thank you. As you are looking handsome as always.
Yeah. You got me with the April Fool's Day. I actually thought you weren't coming, and then my blood pressure started going up a little bit, and it came back down. You can't tell or see because I'm, if I blush, you don't know.
That's so funny. But you're always so calm. Like, you're always just so cool and collected. You're just, you're always chill.
Well, thank you.
So you've got that figured out.
Yeah. Well, listen. You know what? I really enjoyed getting to know you better at Corey McKinnon's event.
Absolutely.
Yeah.
Yep.
And that's why I have you here today, because I want to learn more about you and your journey. And I want to talk about what's happening in the market, because shit's going crazy.
Let's do that.
Yes.
Let's do that.
I want to.
People need to hear it.
I do. I think they do. I do. And we'll have it's an unscripted conversation today.
Love it.
Beautiful. But before we dive into it, who are you? For people who don't know who you are, for my followers and listeners, they want to know your story, how you got into it, and where things are today, and then we'll dive into that stuff.
Yeah, you know what, Gary? At the end of the day, my name is Danielle Chiasson, and I am just somebody who wants to get into real estate and make it happen, and I have, and I'm no different than anybody else, and that's the whole thing about. Once you become a real estate investor and you have a certain amount of doors, and we talked a little bit about this kind of before we started recording, my portfolio as it stands right now is 56 units and all across Ontario, and ranging from duplexes all the way up to a 9-unit building, 8-unit building. And, it's cool and all, but at the end of the day, I'm no different than anybody else who might have one or two single family homes who's a real estate investor. And so, when people say, who are you? I'm just, it's what I do. It's my job. And you know what? The fun thing about my job is that I love it. So it doesn't feel like a job to me, because I get to hang out with really cool people that I love to hang out with, not like being stuck in a corporate office, hanging out with people that I don't choose to be with. Like, I'm choosing to be here hanging out with you. If I didn't like you, I wouldn't be here. So like, my life is good because of that. And real estate has provided that for me. So, who is Danielle? I'm really just like anybody else. I don't know.
And you know what the cool thing is about that is that it's just a matter of you just made different decisions.
Yeah.
You made different decisions that has gotten you to where you are today. Like, we all have 24 hours in a day. You just decided to do something different with your 24 hours. And that probably happened on a particular day. Like, do you know a day when you're like, I am, like, were you in the corporate world, 9 to 5? Like, how did that piece start? Because I think that's always interesting for people that are listening to these shows to say, yeah, but you've got this massive portfolio. Was there a day that started it? Was there something that changed? Was it dramatic? Was it, what happened?
So what I'm going to tell you is this, and I know a lot of your listeners are going to be able to identify with this. I realized that there was something missing. I wasn't content. I wasn't happy. I wasn't where I am today, where I'm hanging out with people that I love and doing things that I love and I enjoy, and, wanting to get up in the morning. And so let me tell you a little bit, this is going to help you understand a little bit about my background. So in my 20s, I completely wasted my 20s.
So did I.
I know. It was great.
Yeah, I was like, what club this weekend?
Right? Oh, yeah. So I actually worked in the service industry. So that's where I worked and lived and partied and ate and everything. So yeah, so that was my 20s. Don't ask me about them. I probably don't remember too much. Mm-hmm. And then, late 20s, I met my former life partner. We ended up settling down together. I relocated. I was out in Calgary at the time. And then I ended up relocating here in Ontario.
Okay.
And then spent the next decade building a family. And he was a contractor, so I did work for him, but it wasn't my thing. You know, it was great to have a family and 3 kids later and beautiful home and beautiful life. And there was something missing because it wasn't mine. And there was something missing. And this is what I'm telling you. I know there are people in your audience right now that are going, yeah, that's me. Because there's a lot of people out there who just default their way through life. It wasn't a choice. You just fell into where you're at. And so I was driving. Some people can maybe even identify with this. I was driving and I heard an ad on the radio about real estate. Now, real estate, back when I was 19, I remember saying I wanted to get into real estate as a real estate agent. So it's always been very attractive to me and I always had curiosity around it. And so there was an ad on the radio for a real estate group. Come find out how to flip. My former life partner was a contractor. I lived in the contractor space. I worked in his office at the time. So this was something like flipping. Real estate. That sounds interesting. So I went to a 2-hour free event, then led me to buying in for a 3-day weekend workshop. Right. That led me into a $25,000 program. So I went to this, and this is before we had anything here. I mean, this is years ago. And so
that's almost kind of like that typical setup, right?
It is. Oh yeah. I totally fell for it, which is fine because you know, it changed my life. Love it. Like no regrets.
Yeah.
So,
and I guess to clarify too, not so much that you fell for it, but it does. I mean, I've talked to a lot of people where they did. And it's like, okay, yeah, maybe I shouldn't have done that one, but I still learned a lot from it.
Absolutely.
And it opens the door for, hey, what is possible?
Absolutely. You know what? Here's what I'm going to tell you. When I bought into that program, and this is what I'm going to tell, because there's a lot of people right now who are on the fence about, should I buy into this program? Should I join that club? Should I, and there's so much out there. So I feel sorry for the people who are wanting to start, because where do you start when there's so much? What I'm going to say is this. When I started, it was like this. I said to myself, okay, it was a $25,000 buy-in. If I do one flip and I get $25,000 return on it, I'm at a net zero.
Right.
But I learn a heck of a lot and I'll find out if this is for me. So I committed when I bought into the program, I committed to doing a flip and getting my money back. But then I ended up flipping for 5 years. So so I got more than my money back. And essentially, and this is what I tell people, like with my coaching and stuff, I go, look, yeah, it's a big investment initially, but if I can get you your money back, then after that, isn't it infinite returns?
Exactly.
Right? And then you have a choice. You don't have to keep doing that. You've learned something. You're going to grow and you're going to have more clarity on where to go from there. Maybe flipping's not for you. Get your money back, but now you're in the game. Now you kind of have an idea of what's going on. So now you can pivot. Now you're able to pivot. And that's actually pivoting is what I want to talk about with 2022
with what's happening
and
today.
The environment, the economy, and everything that's going on.
Yeah. So it was a radio ad, and it felt like something inside you just didn't feel right, like a gut feeling. I don't feel like this is what my life should be.
I'm going to tell you, I've spent a lot of time in seminar rooms, conference rooms, and the people that come in, and both as an attendee and as a speaker. And I get to see all sides of it. People, as an attendee, they talk to you one way. As a speaker, they come to you and share other things with you. The one common denominator is that people that are in those rooms are looking for change because there's something they're not happy with in their life. So they're looking for more. They're looking for something.
Yeah.
And whatever the messaging was that got them there, whether it was an ad, whether it was a friend told them about it, however way that they found out about that event, something resonated. And so the curiosity is like, hey, okay, yeah, I'll go find out. I'll go see what this is about because there's something that's drawing you there. And so when you can find out and the challenge is this, because most people don't even realize that's why they're there, is because there's something missing in their life. You're not happy with something, maybe not necessarily happy. I had a really good life. Like, let me tell you, I had a really good life, but I didn't have a purpose. Like having my kids and raising my kids was just not enough of a purpose for me. It wasn't big enough. I needed something bigger.
Yeah.
And so providing homes, taking distressed homes and making them gorgeous and providing a beautiful house for a family that to build their life in, and rejuvenating neighborhoods and protecting house values for the people in that neighborhood by uplifting this distressed home that might be pulling down the values in that neighborhood. I mean, that's a bigger that's a huge purpose.
Right.
And so, and now now that's not enough for me. That's why I'm not flipping. So now I'm going bigger. So, paying attention to and understanding what's going on within yourself will really help guide you into making those right decisions, those right choices that you're talking about.
Yeah. And I think one of the other things as well, too, that you said, and I think it's, again, getting into that room, whether you're trying to figure out which room you need to get into, just get into the rooms. Then also, I think what you need to do is, and then follow your gut.
Mm-hmm.
Go with the one that feels good. The energy is right. The people that are in there, you're having conversation with them. You don't have to dive in right away. But also be careful, I think, when you leave those rooms to then have conversations with your friends and your family, because a lot of times they'll talk you out of it. Not that they don't want you to be successful, but they're trying to protect you. At least that's what I believe. I believe they're just trying to protect you. And so you have to listen. You can listen to both sides, but then if you're looking for that change and you're going on this path that it isn't working, well, then you have to try this change. At least give it a chance. And don't think it's going to work in the first month or sometimes maybe even the first year. You just got to keep going down that path. And it's a game changer. It changed my whole entire life.
Right. We all have that story.
Yeah.
Anybody who's in real estate and doing it successfully has that story. And did we trip and fall along the way? 100%.
I'm still tripping and falling.
Yes.
Even this week, I'm still tripping and falling. It's a shit show over here sometimes,
Sometimes, most times, right? Yes, I know. There's so for those of you who are listening, if you're listening to this, write this down or just come back to this. Google life of an entrepreneur or the path to success, either or. Type those in. And then search those in Google, go to images, and you'll find two of my most favorite images. And that is what life looks like and what the life of an entrepreneur looks like and what success looks like. And it applies to everything, not just your real estate career, not just your life with your relationship with your spouse. I mean, it's not a straight line up to success. It's a lot of work. There's a lot of down days. Some days you feel like you're on top of the world. I got this figured out. Yay. And then there's other days you're like, oh my God, what am I doing? I don't know what I'm doing. This is not for me. I made the wrong choices. And what am I doing? This is outside my element. And, but that's life. Deal with it. It's part of the journey. So you just got to accept it and embrace it, because those are the moments where you're going to learn and grow.
100%. It's the journey that you have to enjoy, not the destination. This journey is what is the important piece. So then now you've grown this incredible portfolio. You've learned a lot. You've flipped. You've got multifamily, small, large, and the pandemic comes. And let's talk about more specifically last year. Because a lot of investors, now they're at home. Now they've got time to join all these webinars and seminars. And now everybody wants to become real estate investors. And it looks easy. And the market now takes off like a rocket ship, like an Elon Musk rocket ship. And now people are doing all these perfect burrs all the time. Mm-hmm. Everybody's doing a perfect burr. I'm like, this shit's crazy. Mm-hmm. And then you've seen wholesalers come in making $100,000 on every deal. Did you see the setup coming? Did you see the interest rates go where they were going to go? Because I didn't, Let's talk about this, because I think it was a very interesting year.
I am so glad, Gary, that you said I didn't, because that's honest. It's true. It's real. Most people, now I've been doing this as a real estate investor for a decade. I bought my first house much longer before that. I don't want to admit how long ago. But it was
fair enough. We'll keep that out.
Let's say, okay. Well, it was a while ago. When did I buy my first? So it was 19 years ago. Bought my first, my primary residence and my first rental house at the same time. Actually, I bought two properties, and so I was a landlord for a long time. But that's where I was an amateur investor. I thought I knew everything, and then I only started doing this as a career 10 years ago. I started this in 2013. And so when I joined Fortune Builders, and so in 2013 was really a turning point for me when I became an amateur investor into a sophisticated investor. Now, back then, there wasn't a lot of investors. There was not. especially here in Canada, which is why I went to the States to learn. And it was just starting to kind of come up. I mean, Flip This House, that was the guy actually from Flip This House on A&E, I think it was. Than Merrill is actually my mentor.
There really wasn't. Like,
There was
I think people
nothing.
need to understand
There
that
was
too.
nothing.
Like, I had to drive to Burlington and Oakville and,
Yeah.
wait for some of these groups to come in town or just wait for these events to happen. Like, Rain was a big one back in the days as well too. And it wasn't easy to get the information. I remember I had to sign up also for Bigger Pockets.
Right.
And that was a U.S. company. So you had to be careful there as well too, because what they were teaching you down there and what you could do up here, yet, it wasn't the same.
Yeah. Yeah. So, I started in 2013. There wasn't a lot of people in the game. So, and the reason why I tell you this is because most people who are in the real estate game now, most are new and they haven't gone through, and I don't know how long you've actually been in the game, but
2008.
2008. So
Yep.
same thing. So like you kind of came in when everything was already crashed?
No, just before.
Just before.
So I got in when you could buy with zero down, 40-year amortization.
Wow.
Yeah, it was a very small window in Canada.
Yeah.
Very small window. I'm like, oh, this shit's easy.
I was busy having babies. I missed out on that. Dang it.
Yeah. And then it crashed.
Yeah.
But I mean, I didn't really understand it. And I was like, okay, what's going on? Okay, but that's when I started.
So at the end of the day, the reason why I say this is because you're one of the few people who may have seen a low in the market. Because since like 2010, 2011, and for us here in Canada, by the way, 2008 wasn't a crash. Like we had a bit of
Correct.
stabilization, but we didn't have a crash.
Correct.
So when the market turned and just collapsed in the States, we had a bit of a flatlining here. But I remember like the value of my property didn't go down. It was just the market slowed because people were scared. And so ultimately, everybody who's really active in real estate right now has never seen a downturn in the economy. So last year, and I'm glad you said that, because did you see that coming? I did not.
I didn't. I remember going on a couple shows and talking about, okay, yeah, no, I see it. The interest rates are going up.
Mm-hmm.
I think they're going to probably be maybe 1, maybe 2 and done.
Mm-hmm.
I remember saying that.
Mm-hmm.
That's what I thought, because I didn't think that they were going to be able to raise them that quickly and that fast.
Right. And that's the lack of, most real estate investors are not economists.
Right.
And economists knew that this was going to happen because they understand inflation, whereas the average person just knows that inflation means we pay more for a while until it corrects itself or until the government intervenes. And they do that by raising interest rates, slow down the economy and doing quantitative tightening. So most people don't get that. So most investors did not see that coming. They continued to buy. And then you add on top of that in 2022, the lack of labor shortages in the market, inventory when it comes to materials, when you're doing flips and burrs, and when you want to do that, the prices, inflation, then you add in inflation, the prices were ridiculously high. And then those interest rate hikes with anybody who had a variable mortgage, that was just slowly chewing away at cash flow. But people are busy flipping and buying houses and dealing with contractors. They really weren't paying attention to their numbers. And so it happens so fast.
Right. And the thing too is that when you're flipping and you're burring, you don't want to be in a fix, right? Because you need to be able to renovate the property, get your money out, do your burr, and move on to the next, right? And and here's the thing as well too, is that in 2013, 2014, I really started paying attention to the larger macroeconomics. I started understanding what happened back in 1945 with Bretton Woods and Richard Nixon when they took the US dollar off the gold standard. So I knew that cash became trash. Robert Kiyosaki talks about it all the time. Then when he started printing money as much as they were in 2008, I'm like, okay, now we're really seeing what's happening with this cash. It's turning into even more trash. And then when they did it again during the pandemic, I'm like, okay, this is even more trash. But I still didn't think it was going to happen that quickly. I don't know why, but I've seen it. I knew it was coming. Mm-hmm. I just didn't think it was coming yet. Mm-hmm. And I remember, I'll share this, and I want you to get back over to you. And I remember it was somewhere around September, and I was up at the cottage, and I was talking to one of my neighbors. He doesn't do anything about real estate investing. Nothing. Okay. And I asked him, I said, hey, are you in a variable or a fixed? He goes, oh, I'm in a fixed. Like, Then I started thinking back to when the pandemic first hit and everybody said, oh, it's going to crash. Like, okay. So all the experts were getting it wrong. And here I am talking to this guy at my cottage. Is like, I wonder if he is seeing something else. Mm-hmm. Then I told my wife, and I go, you know what? We really need to take a look at all our properties now. And we looked at them all, and we had a red line. And we're like, okay, if another rate hike comes, we got to lock in. Mm-hmm. And we just started locking in. Mm-hmm. Now, whether it's right or wrong, I think you got to do what's right for you. But I was like, I'm going to stabilize these properties, and I have other businesses that I can focus on.
Right. Yeah. And again, coming back to investors that were busy doing flips and underwriting properties and dealing with contractors and all of that, they didn't do that. Mm-hmm. And I was actually upset with myself because I didn't start looking at my portfolio and running the numbers until September. And I was upset with myself that I didn't do it in June. I was like, how did I not see this coming?
Me too. Isn't it crazy?
Yeah. Yeah. So, I don't know. It just seems a little bit surreal, the fact that it happened so fast, that it caught us. At the end of the day, though, this is where you get good.
Yes.
When you're challenged. And so for those of you who don't know yet what to do, the worst thing you can do is put your head in the sand and say, no, I'm just going to ride this out. That is the worst, absolute worst thing you can do, because you're actually going to short yourself the opportunity to learn something and to grow. Start diving into the numbers. Start having conversations with people. If it's not looking good, if you're uncomfortable, you need help, ask. Mm-hmm. And that is the biggest mistake that people are having right now, is that they're scared to, one, sell because they feel like they failed. Guess what I'm doing? I'm selling. You said you're selling. That doesn't mean you failed. You're going to reallocate that. Here's one of the things too about selling. So people are like, Danielle, why are you selling? Let me tell you why I'm selling. There's a number of reasons why, but let me give you a simple answer. Why would I not? So I'm going to struggle and try to get this property and stabilize. Because when we first looked at our portfolio, my partners and I talked about a lot of different things. I threw a lot of different strategies. Okay, do we bring in some JV partners and bring in capital? The number one thing is I wanted liquidity, wanted some cash in the business so we could ride out the storm. Do we do short-term rentals? So a couple of turnovers. Do we run those as short-term rentals? Do we sell one of the underlying assets? And so that's maybe not performing as good to have cash. So we looked at so many different scenarios. Do we try to refi and re-amortize? Like, there's so many different things, different strategies that you can do. But ultimately, I thought about this and I went, you know what? Why would I try to stabilize and work with this when it doesn't work with the numbers right now with the interest rates, when I can sell, pull out that capital, and maybe buy back in 6 to 12 months with a property where the numbers work and make sense with the current rates? Because this is what happens. When the rates start going down again, the inverse of what happened last year when the rates run up and chewed up cash flow, when the rates start going down, it starts boosting your cash flow. So if you can find a property that's a better performing asset now with today's rates, then you're just going to be, honestly, like, it's just going to be great to your cash flow once the rates start turning around and going back down. And I don't like to speculate. People are like, it could be 6 months, in a year, for sure in a year, the rates are going to start going back down. We don't know that.
Yes.
We don't know that.
That's a good point.
And I'll tell you what I do know. If we hit the word recession, the big R, it's not going to happen fast. People think it's going to bounce. Like the Ontario Fair Housing Market Plan came in 2017. Everybody's like, oh my God, the market's going to crash and the government's intervening. And then we had a 6-week blip and like it bounced. 3 months later, everybody was buying again. There was bidding wars and the prices of housing was hot again. And I think that whole scenario that happened in 2017 is giving people a false sense, and COVID. So there was that. And then COVID, everyone's like, oh, everything's going to crash. And then again, that was 2 months. And then COVID happened the end of March. What happened? Everything seized up in the real estate market. And then July hit and it was hot as ever. So people have seen a trend where things are seizing up, but then they bounce really fast. But I don't feel that economic situation that we're in right now is very good. And I'm not confident that it'll bounce. Maybe it will. I could be wrong.
Yeah, I want to dive into that. I mean, you said a lot there that I want to also pick into as well. So number one, what I really liked is the fact that you said that selling is not failing. I actually just did a video on that recently, saying that and showing one of my properties. I said, look, this was a winner. It is now turned into a loser. And so now I'm going to sell this loser and I'm going to get back into the market and buy some more winners. And I think that's what people need to realize. Like, take a look at your portfolio. And if you have losers, it's okay to sell them. And especially if you've got equity in there. There's nothing wrong with that. You know, if you bought a $10 stock and you sold for $20, nobody says you failed. Right. And I think people are missing that. They're thinking that you can't pivot. You can pivot. And you're saying the same thing as well, too. And I think that's really important. So when you started taking a look at your portfolio in September, okay, you then decided that, yes, I'm going to start selling off some of these properties. What else did you decide to do? Like, was that just a stabilization period for you, taking a look at everything and then saying which ones are the ugly ones, which ones are the good ones, and then make a decision from there?
So that's, it started out as, how do we stabilize this? How do we boost some cash into the businesses? Then it went to, well, maybe we should just, instead of trying to save this one, we don't even like that one, maybe we should sell. And then it went into diving into each property and then realizing that this is not the portfolio that I want ultimately. So it really opened up the conversation as far as what asset class that I want to buy, because I defaulted into these properties by way of flipping. That was what I did for so long. And again, when you live your life by default, you're not choosing, you're defaulting into something. And that's what I did. And all of a sudden I'm like, no, but this is not what we want. Like, this is not what I don't want to have grandfathered tenants. I don't want to do cash for keys. I don't want to deal with these crappy properties and turn them over anymore. I just outgrew it, and that's okay. You can outgrow things. As you're growing, you will outgrow things. And by the way, that counts too for relationships in your life. That happens. So just a heads up for those of you who might be going through that. It's okay. That's just part of the journey. It's part of the process. So ultimately, though, I outgrew the portfolio, and we just decided this is not what we wanted. So this was an opportunity for us to really look at it and decide, what do we want, and be more intentional about the properties we own. So as a team, we decided we wanted to do new builds. We want new units, and we want purpose built. So now, by offloading the portfolio, now we're having conversations with developers, land developers, and saying, hey, let's partner, let's do this together. We'll do the build side of things. You can do the land development, bring it to SBA, we'll take over, and then we'll build it, and then just create a beautiful partnership. And so that's just part of leveling up. But you have to go through some pain that forces you to dive into something that maybe you just overlooked. You just didn't think that there was an issue there until it's an issue, right? And that's essentially what's happened. Plus, my passion really is helping people. And I know that about me. Like, I'm a people person. I want to help people. I want to help guide them, unblock them, teach them. And so by offloading this property and reorganizing the structure that I have with my partners, I'm able to hit the reset button is what we're doing right now. And then I'm able to structure things so that I'm not in the realty business, because now when we go back into the realty side, I'm going to be overseeing things, but not being the one that's in the weeds anymore, because my one partner is a project manager. And so we're going to exit him out, and he's going to do all of that. And together at a high level, at the CXO level, we're going to be making decisions and having a team under us. So we're able to restructure the whole thing, but that's just growth, right?
Yes, that's good. And I'm glad you brought that up as well too. Hitting the reset button doesn't have to be the Klaus Schwab reset button. That's a big one. But you got to take a look at your portfolio and see what makes sense. And also, with what happened last year and where we are now, what are your thoughts on the trouble that you see potentially coming? And do you see a lot of real estate investors that are in trouble? We started this Red Line series last year, and it was really to sit down with investors, to send us an email or DM us, say, hey, look, we're in trouble. And then we would then jump on a call with our mortgage agent, and we would have other investors jump in the call and try to figure out how to resolve their issues based on the 3 or 4 or 8 or 10 properties that they had. And it went over really well. You didn't have to know who they were. We just said, these are the properties, showed some fake properties. These were the numbers, and it helped. Do you think there's going to be even a larger problem this year? Because it feels like there might potentially be where these investors have gotten in over the heads, cottages. Mm-hmm. A lot of people went out and bought cottages and thought they were going to get these big numbers. Mm-hmm. What are your thoughts on all this? Because it's a lot.
It is a lot. I know that there's a lot of people right now. I just had lunch with an investor, and they did a flip, and she's going to be taking a loss on the flip. And sometimes it's a hard decision. I've done it. I flipped a house downtown Toronto. I took a loss on that one. And that actually sold it the end of March of 2020. So we put it on the market right after they shut down. We put it on the market right before they shut down. We put it on the market, I think it was on the Friday, and then they shut down.
So that would have been like March 2020 or something like that?
Yeah, it was the end of March, the last week of March. Anyway, so it was the worst time to sell. But again, that fear that the chatter was like the market was just going to dry up and fail. So I was just happy to get an offer and take it at that point. Yeah, I think there's going to be some losses. There's already been some losses, in fact. Mm-hmm. And there's some, big players that have dropped. It's going to happen. It's part of the turning of the tides. Warren Buffett says this, like when the tide goes out, you get to see who's swimming naked. Mm-hmm. And the biggest issue is that most real estate investors that are in the game right now have never seen a downside in the economy. And so they're not prepared, and they don't have the tools or the experience to deal with that. So the biggest thing is I tell people, set your pride aside and own it. It's okay, because you're not alone. There's a lot of people that are in trouble right now. But you need to talk about it. Mm-hmm. You need to talk about it. You need to put your hand up, and you need to say, I need help.
Yeah.
If you don't say that, then you're not going to get the answers you need in order to ride it out. And your problem that you have now, which is maybe manageable, will become ginormous. And what I see, to answer your question about, in the future, again, I don't like to speculate. I'm preparing for the worst and hoping for the best at this point, because what's brewing right now, south of the border, in the global economy, it's not looking good. It's really not looking good. And again, they just did another interest rate hike in the US. How's that going to look for us? We don't know where the numbers are going to go. Is there some manipulation? There's conspiracy theories too about, if governments are, playing with the numbers a little bit. But at the end of the day, I don't like where things are going. My internal vibe is that it's not going to go well. And I anticipate that there's going to be a flood of properties coming onto the market, because people are now just starting to realize, like, I've been doing this. You've been looking at this since last year. And so, in the third quarter of last year. And so people are now 2 quarters behind and trying to play catch up. And there's a lot of people that have been waiting and holding on to their properties to hit it on the spring market. So right now, people are like, oh, the real estate is really slow right now. It's not slow. It's actually just balanced. Like right now, we're just in a more balanced, because houses aren't selling in 7 days doesn't mean the market is slow.
Yeah.
We're just in a more balanced state right now. But I think it's fragile, and that could tip if there's a massive amount of inventory that hits the market. And I think that may happen.
Yeah. And one of the things that we're seeing right now on the street, so we are, April 1st. Okay.
April 1st.
So whenever this gets released, is we are now starting to see multiple offers again. Mm-hmm. And it's not just a few, it's a lot. Mm-hmm. And you're seeing now listings coming out. We're holding off on offers, which is interesting, because where the interest rates are, and specifically in these homes that are in that 500 to say 800 price range, they haven't come down that much compared to say like the larger homes, which is wild. Mm-hmm. And it almost feels like there's this big bounce. But I also agree with you. I think that you're going to probably start to see some inventory come on the market. I'm starting to see a lot of cottages just sitting there. Mm-hmm. These $1 million cottages that would have been scooped up last year in like a day or two have been sitting there for months. Mm-hmm. And is it potentially some good buying opportunity out there? Yes, but you got to be careful. You got to run your numbers. And I think people think that you don't like, oh, well, I should do the variable. You can go fix. this can be a long-term play. You can do long-term plays. There's nothing wrong with it. The numbers make sense, even if there's like, what is it, 5.5%, 6% somewhere in there, and you got something and it cash flows, it's okay to lock it in for 5 years. I think people think that they shouldn't. At least I think, I don't see anything wrong with it.
Well, I think when you're in a market that's unpredictable, I think it could be a safe play. And it all depends on the individual's or the business's ability at that time. If you're not sure about your cash flow, then absolutely you should be going into a fix. But it doesn't have to be 5 years. You could do 3.
Exactly.
Right? You could do less.
Right.
And then just revisit. So I don't know that the interest rates are going to go up much more, knock on wood, if they do at all. So, do you want to stay in a fixed or a variable? It depends on the person's risk tolerance. It depends on the person's liquidity, if they're able to carry those extra costs, if the rates go up anymore. So I don't know. It's a tough decision, but ultimately it's a unique one based on the person.
Now you touched on macroeconomics there and what's happening in the U.S. Are you looking at the world stage as well too? And what are you paying attention to? Because there's things that I'm really paying attention to. I know a lot of people aren't talking about it. I actually just recently did a class for my VIP mentees on the history of money to talk about where we've been before. Like I go back to Roman Empire times and where things are going now and the bricks and what that means. And a lot of people don't understand some of this stuff. I say a lot of people don't. What are you specifically looking at to kind of help navigate what you should be doing or where you think? Because again, at the end of the day, we're all kind of making decisions based on where we think things may be moving.
Yeah. So you said, you think a lot of people don't know and don't realize what's happening out there. Most people don't. Like that's just the sad reality of it, because it's complex. It's not easy. I mean, you and I live and eat and breathe this every day. And so it's easier for us because it kind of impacts our business. It's directly correlated. We maybe geek out on that a little bit. And we're just curious people. We want to see how things are functioning. And like you said, going back, you can look in history and get some clues there too, right? So for me, what I was looking at last year, I was really paying close attention to last year, was unemployment and layoffs. And so typically with interest rate hikes, what happens is it doesn't just impact us as investors and our mortgages, but it also impacts very heavily businesses, because the exact same principles that happens to us with eating up our cash flow, it also eats up business cash flow. And the easiest way for businesses to protect, and I'm talking large publicly traded businesses, they have to protect their bottom line because they have shareholders, they have stockholders. They have to protect that. And so ultimately the value of the business is directly correlated with the money that's coming in, their NOI. And so if that dries up, the easiest way for them to protect it is by layoffs, by cutting their labor, because that is the biggest line item on their statements. And so on their expense statements. So if they can cut some labor, well, now they're protecting that bottom line and protecting the value of their business. So what happens though, is now you have unemployment and you have less people with money, less people buying maybe the product that business is actually selling. So it kind of shoots themselves in the foot, but that's kind of the beginning of, so it's a telltale sign, the beginning of a recession. But unemployment, I don't know what is going on. Things are backwards this cycle. It just seems like the whole economy is not functioning the way it historically does.
It's odd, isn't it?
It's very odd. So it's really hard to see what's going on, like the real picture of what's going on.
Like it's like we're in a recession, not in a recession. Right. It's coming, but it hasn't hit yet. It's like, it's so weird. Like you see the layoffs happen, especially like in the tech sectors. You've seen the recent, and this is actually something we should talk about too, the recent failures in the US with the bank failures. Is that going to maybe potentially creep up here? I don't know. I think our banks are a little bit more stable and more, what's the other word I'm looking for? Structured than say maybe with some of those other venture capital banks. But we're in this weird spot. It
is. It's hard to, and I think that's why you're having a lot of conflicting advice and conflicting, economists saying one thing and another one saying another. And it's difficult to do that. Now, what's happening with Silicon Valley Bank, SVB, and the other banks in the States with the failures and the bailouts that are happening.
And the printing of money again.
Well, that's the thing. Bailing them out is printing money, yet we're in a quantitative tightening cycle. So it's actually contradictory. So you have like two people in the States that are running the economy on different levels, and they're actually countering each other. So and I don't remember that ever happening. And by doing that, the biggest issue now, what's happening with saving the big banks, is everybody in the little banks are taking their money and throwing it into the big banks, because now those ones are not set to fail, because the government isn't going to let them fail. So their money is better in those places. So here's the one thing that people don't know. And your audience, some of your audience might not know this. When we have deposit accounts at a bank, there's a limit to how much is insured for the account holder.
Mm-hmm.
And it's $100,000 here in Canada. And if you have, and I deal with multiple banks. So I've got $100,000 at CIBC and $100,000 at RBC, and I got $100,000 at Scotiabank. If those banks all fail, I'm not protected on $100,000 for each bank. It's $100,000 per account holder. That's like, go by your SIN number. So if you have a whole bunch of money at the bank and that bank fails, you're only protected for $100,000. So that's why it's the same principle in the States. And that's why all of these people are taking their money and going to these non-failing banks now, these protected banks, and it's going to collapse all these little banks. And I don't know. It doesn't feel good. I don't like what's brewing down there right now.
Yeah, and you know what, you bring up a really good point, and I actually talked about this as well too. Like, I think one of the unsafest places to keep your money is in the bank.
Mm-hmm.
And so where do you put your money? I still think you put your money in those hard assets. So like when you see other economies that have failed, and they do a reset on their currency, the ones who do well are the ones who have the hard assets. The one who's have cash or under the pillow or in the banks, those are the ones that always get hurt the most. And I think you should be putting it into real estate. I still think I'm very strong on that. And also now I'm starting to feel, and I've done this earlier on in the years, back 2013, 2014, is buying some gold and silver. It's a hedge. It is a hedge. There comes a time when eventually you will have to offload it, but it's a good way to hedge when there's uncertainty in the currency.
Absolutely. But the reality is this, though. Most people don't have the cash in order to buy gold.
Correct.
Right?
Yep.
And the beauty about real estate is that you can leverage other people with cash and buy some hard assets and have a property, a hard asset that is carrying itself. And that's what you want at minimum. But this cycle in 2022, I think the biggest lesson for people to learn in 2022 is to have cash, to have some liquidity, because you just never know what's going to happen.
Correct.
And there's this hole in the last 5-8 years where it's like, leverage, borrow, over leverage in order to buy, zero money down, all of this. And that's why the people that have failed up until now, they've failed because they were over leveraged. So you have to have one, cash, and two, a stable portfolio. So don't go out and buy a whole bunch of properties and over leverage. Wait, I know people want to go hard and go fast, and there is something to be said for that, which is good too, but you just got to do it smart. So if you have some cash and you want to go out and buy a whole bunch of properties, then great, go buy a whole bunch of properties. Make sure you have 20, 25% in those properties, right? Yep. And then that way you have some equity so that if there's any problems, you've got room to move, or you can liquidate and still not take a massive hit. But what's happening is that people are going into that zero money down and then borrowing for the construction costs. And then now what happened in 2022 is that people were expecting a certain refi amount, and they got a double whammy last year because they thought the ARV, so the after repair value, was going to be a certain price point. Well, the prices dropped last year. So they didn't get the ARV that they wanted. And then the bank decided, we're going to be conservative. We're not going to give you 80% loan to value. We're going to give you 70 or 75 loan to value. So now the money that they thought they were going to withdraw on the refi was significantly lower. And now they have all these private loans that they owe and they can't pay back.
Do you think that's where a lot of them made the mistakes with educating themselves only being in the real estate investing game for a year or two, and also now they want to do the VTBs and the promissory notes, which are very dangerous if you don't know what you're doing, especially in the economy that we just went through or going through. Do you think that's what it was? They just inexperience?
Absolutely.
Yeah.
Absolutely. It's inexperience. And again, you don't know what you don't know, and that's what makes it dangerous.
The ones that will fail, there's going to be obviously people that are going to fail from what happened last year. The ones that come back, I think will come back even stronger.
100%.
The one, and then I think it's going to crush, unfortunately, a lot of them as well too, where it's like, I told you, Auntie told me not to get into real estate investing. See, you listen to Danielle on her podcast.
It's true though, but this is where you trim the fat. Nature has a way of cleansing.
Yes.
And this is a cleanse. We are going to shred the fat. There are some people in real estate right now that shouldn't be in real estate. They don't have the knowledge, they don't have the education, nor do they have the drive to take the time to learn.
And they don't have the mindset.
They don't have the mindset. Oh my God. Okay, so can we just stop here and start a whole new podcast on
mindset? Let's do mindset.
Oh,
because I love the mindset piece because it's incredibly important.
So
to me, the mindset is more important than the technical aspects of learning all these different techniques. That stuff will come, but you got to have the right mindset because it's not easy. This is not an easy road.
100%. It's and this is what people overlook. And the ones that are going to be shredded through this process are the ones that don't have the right mindset in order to get through this game. Being a business owner is tough. It is one of the toughest things that you can do. And people on the outside look in and say, you know what? I can do that. But then once you actually start getting into it, you don't realize how much responsibility you carry. And I'll tell you, as a business owner, and especially when I was flipping houses and stuff, it is my obligation to make sure that I take care of my people and my staff, and they're taking care of me in return. And so when you are responsible for somebody's job, when I was flipping, they were contractors. If I didn't have the next job lined up for them, there's no food on the table for their children. And that's something that you have to really take seriously. And there is a lot that goes into managing that responsibility and delivering. And it's a lot. It's a lot.
Where do you get your mindset from? Who are you listening to? And what's been some of the most important things that you've learned? And what were maybe even some of the challenges and how you got over them? How that mindset helped you?
Oh, where do we start with that?
I know it's a lot.
Gary.
We got lots of time.
How much time do you have?
You want me to get the wine out?
Oh, yes. I'll tell you all about mindset. How much time do you have? So listen, honestly, for me, number one is you have to be humble. You have to be able to look at yourself and look inwards instead of outwards. So there's two different types of mindset. There's the scarcity mindset and there's the abundant mindset. The scarcity mindset is where you're fearful, you're negative, it's everybody else's fault. You look external. When there's a problem, it's everybody else. An abundant mindset is more positive. They're more inclusive. They're wanting to work with others. They know there's enough opportunity out there for everybody, which I firmly believe. But also they're able to take responsibility for their actions. And even if it's not 100% their responsibility, most people with an abundant mindset, with a solid mindset, abundant mindset, they're going to just accept it as their own. And so where did that start for me to really fortify that and be more on the positive and the abundant side? Where do I start with this? So I was in therapy for a long time before I even started in real estate. And I am going to tell you right now, I am a firm believer that everybody should have a therapist and see a therapist regularly. Like if it's once a month, invest in yourself, because I'll tell you, when you invest in yourself, you never lose that investment. It's not a depreciating asset. It's an appreciating asset. You're just the more you invest in yourself, the better the asset becomes. And that asset is you.
And that therapist helped you look internal?
So that,
ask questions for you to really answer why you think or doing the things that you're doing to, affect your mind. I assume that's what part of it
Yeah.
is, right?
I'll tell you.
Because that's that negative talk.
Yeah. Okay. So I'm glad you brought that up. Okay. So here's the thing. When I first started with a therapist, one of the biggest lessons that I learned was that I needed to take ownership for my own happiness. When you're in a relationship, you tend to, what I didn't realize is that I became dependent on the other person to the point where I was unhappy and I was waiting for him to step up and make me happy. But it's not his responsibility. It's not his job. He's there to support, but he's not there. He's not responsible for my happiness. That's on me. And so that was a big one.
I'm so glad you brought that up because Darlene and I, we went through that same thing and I was blaming her for not making me happy.
Yeah. What is up with us?
And then I was like, oh, I'm going to make myself happy.
Mm-hmm.
And then by making myself happy, then that might maybe reflect onto her. And she may now then say, well, hold on, my responsibility is for me as well, too, to make myself happy.
Mm-hmm. And
that was such a huge thing. And a therapist had helped us get through that.
Yep. I'm telling you, everybody should. So I was in therapy, I don't know, for like 9 years. And when I was doing great,
mm-hmm.
I was still going. Like I wasn't there because I had a problem, work out a problem, and then stop going or what. I was there consistently. In the beginning was once a week, and then I did by twice a month, and then I ended up going monthly. But when things were good, I was still going. And the things that you look at when things are good is different than what you look at when you're struggling with something. And so you get to really get to know yourself and dive in deep when you're just continuing to work on yourself. But I'm telling you, your best asset, we talk about hard assets and investing into hard assets, but what allows me to invest into those hard assets is because I invested into myself first. And I'm like, we are the number one asset that we have. And if this asset isn't functioning well, nothing else is going to make sense. It's just not going to function well.
Yeah.
It all starts from within.
Yeah, it does. You know, when I first started going on the path of real estate investing, who I started listening to first, my brother brought The Secret over. And I was like, what? You can just write things down? There's more to it than that, obviously. But that, The Secret really kind of did it at a high level. And then I started listening to Jim Rohn.
Mm-hmm.
That is what completely changed my whole entire life.
Mm-hmm.
Because then I started understanding, oh, it's me. I got to start. Like, I used to get pissed off because TD Bank wasn't paying me enough. But at TD Bank, they still paid people millions of dollars. So who was to blame? Was it me?
Mm-hmm.
Was it the bank? And so you get to this point of blaming everything around you, and you start blaming your environment
mm-hmm.
and the friends and your aunts and your uncles. And it's like, no. You get to the point of like, no, it's you.
Mm-hmm.
You've got to fix you. And once you can fix you, and once you start to then believe in yourself, then things can change. Then things can happen.
Absolutely. But believing in yourself is not an easy task.
It's not.
And so here's what I tell people all the time and what they maybe don't understand, which is why I explain it so often. Your mind doesn't know the difference between a truth and a lie.
Okay.
And so believing in yourself, you have to lie to yourself for a while because it doesn't feel natural and your brain is going to reject it because you have said the opposite for so long and that's what your brain has bought into. So once you start changing your thoughts, and you have to do that consciously, it's an active thing you have to do, and you practice that, eventually your mind starts accepting that as a truth, which will then impact your belief system because then you'll start believing it. Then once you start believing it, then the actions will start to follow because your actions always come from your belief system. So your belief system drives your actions. Your belief system drives your thoughts, which drives your choices, which then fuels your actions. And so like that whole process, you got to change your belief system. And by doing that, you have to lie to yourself. So it's the whole fake it till you make it. It's not necessarily going out there and doing something that you've never done and you know nothing about it and you're faking. It's not about that. It's about lying to yourself for a better purpose, for the greater good, so that you can make a change from within, which is one of the hardest things to do.
You know what? You've said it the best that I've ever heard. Fake it till you make it, but more internally.
Yes.
as opposed to externally. And I think people hear that. I say, I've never heard it like that before. So I really like that, because people think that, oh, fake it till you make it. Yeah, but I don't want to be fake. You're not saying to be fake on the external.
That's right.
You're saying being fake on the internal.
That's right.
So that you can get your mind to get caught up on where it's going.
That's right. So you can get your mindset.
I love that.
So you can get your mind set. So you can get your mindset right. And so the fake it till you make it, I think people identify there's a bad stigma around it, because there's the stigma that, okay, well, if you're faking it, you're just faking to everybody else. It's not, I'm not doing that for everybody else. I'm doing it for me.
Right. I like that a lot.
Yeah.
I really do.
Yeah.
So who did you listen to, or who have been some of the best mentors and coaches that you've had in your life, and how have they impacted you?
Yeah. So Jim Rohn, definitely Jim Rohn.
Oh, man, I love him so much.
I know.
You know what I used to do with Jim Rohn, I'll let you continue, is when I used to listen to him in my car, I would listen to him and he would say something powerful, and then I would hit stop, and in the car I'd hit the voice recorder, right? And I would say it back in my own voice. So I'd paraphrase it. Or if I was sitting at home and listen to him, I would paraphrase it so that and then I would go back and listen to it. And then it felt like it was me saying it. It was kind of a weird way of doing it. But then it allowed me to now memorize these quotes and these sayings, and I internalize them. And man, it just changed my whole entire life. Sorry. So anyways, I just wanted to say that I love Jim Rohn so much.
But I love that exercise, because you're able to then connect with the message as opposed to just hearing words. What you're doing in that exercise, you're actually connecting with the message and making it your own. And so that it actually dives in deeper. So saying it back, what I used to do is write it down.
Yes.
So, and again, I would do the same thing, but instead of verbalizing it, I would just do it by writing it down, because when you write things down, you dive them in a little bit deeper into your psyche. So if you're going out to a conference or whatever, it's like, oh, I don't take notes. I'm just going to, well, no, take notes, because when you take notes, you're actually going to retain more. So by repeating it or by writing it down, you're going to retain it. And that's going to dive in deeper into your psyche and have more of an impact. So if you're going to spend the time to listen, you may as well spend the time to listen and make it worthwhile. Otherwise, you're not just wasting your time. It's something you're going to forget.
Yeah.
And so by writing it down, or even having a conversation about it with somebody afterwards, that's even better, because now you have to retrieve that information out of your brain. You have to dig it up. And then, hey, Gary, I heard this thing that Jim Rohn said the other day. It was amazing. And then you're repeating it back. Again, you're just diving it deeper into your psyche, and you're rewiring yourself by doing that. Like people don't even realize. So, but having all of these positive messages, massively impactful. So
learn, do, teach.
Learn, do, teach.
Learn, do, teach.
That's right.
Yeah.
Learn, do, teach. So Warren Buffett is another one. I love all the things that he says. Tony Robbins. Napoleon Hill was a big one in the beginning for me.
Yes.
Napoleon Hill has a thought of the day. You can go on the website and then just sign up. So anybody who wants to do this, and I swear to God, 5 a.m. every day, hits my inbox. Used to look at it religiously. And if I was having a down day, I would just do a Google, because I never delete my emails. Don't ask me how many emails I have in my inbox right now. It will scare you. But so I would type in Napoleon Hill in my email platform, and then I would see all those, and then I would just keep reading, probably go through 20 or so, and just get my mind right in the morning. If I woke up, because we all wake up on those days like just negative. Nothing's going right. I don't want to get out of bed. I'm just miserable. I don't want to deal with life. And I would read this. So in the beginning, it was a lot of Napoleon Hill for me.
I need to go back and read that book again. I did read it, but when I read it, I was still like learning the whole mindset stuff. It was a powerful book, but I don't remember it, and I got to go back and do it again. And I bet you it would, man, it probably changed my whole life again.
Yeah, because you read it differently.
Yes.
Like you're in different spots in your life at different times, so you read it different. So here's what I do when I read a book: I write in the margins my thoughts.
Do you? Yeah. So you like completely destroy that book.
It's called
highlights
Love.
This, that.
It's called Love.
Okay, you're right. That's actually a better way of saying it. Love. Yeah. So you're making love to your book.
Absolutely. And I'll tell you again, it comes back to, it takes me forever to read a book, especially a book like that, because then I do highlight things. So as you're highlighting it, guess what you're doing? You're rereading it. Guess what you're doing? You're deepening that thought into your psyche. Again, it's about, and then I have a thought about that line that I highlighted. So now again, I'm just making it deeper into my psyche. So it makes the time that I spend with that book and the lessons that I'm learning in that book more meaningful, because I'm actually absorbing it and retaining it, as opposed to just reading the words and moving on. So if you read and everybody's like, oh, I'm a fast reader and you're really proud about that, great. It's not for me, because for me, I like to make it meaningful, make it impactful. I want to learn those lessons in the book. And then the beautiful thing is I can go back to that book in a year and I just read the highlighted parts, because I can make it through the book a lot faster that way. And I can see the margins and compare where my thought process was then, and then compare it to where it is now.
And you can even go deeper, where you now take a look at the parts that you didn't highlight and read some of those and say, oh my God, here's I found something new.
Yeah.
Right? That this didn't register particularly at that time.
Absolutely.
Yeah.
And that's the thing. I've done a lot of conferences multiple times. When I said I went to Fortune Builders, like I went multiple times. And anybody who, like, if you buy an online course and you did the course, go back and redo it again. Because even if you buy a multifamily course and you've done it and you've bought a multi and you've gone through the process, go back and listen to it. Because there's going to be things there that you missed the first time around because it was so much information. It is impossible. It is physically impossible for you to retain everything when you're learning it for the first time. So if you go back and you re-listen to it, or you take another multifamily course, then you're going to find more nuggets that didn't stick for you because you just didn't have the experience to understand what that exactly meant. And so now that you have the experience, you go back and you're like, oh my God, I can't believe I missed that. That is such a great tip or a great idea or a great strategy. Didn't get it because there was just too much other stuff. So it's like picking, it's like picking apples off of a tree. Like you have a basket and then you fill up your basket, and once it's full, it's full. There's nothing more. There's no more room. So you walk away from it. You come back to that tree. There's more apples. So just go get those other apples. Yeah,
no, I agree. Yeah, the mindset's so important. What are you doing next? Where do you see yourself in 5 years? What does that investment portfolio look like? Lending out money? What are you doing? Are you going to come live in Mexico with me? What are you doing?
Yeah, I was really excited about going to Mexico with you. But I have to be a good girl and stay focused. So one thing I've gotten better at is staying in my lane and focused on one thing. Because here's the thing. What we do when we first get into real estate investing is we squirrel. We want to do everything. Yes. And so I was really good about, just doing flips for a while. And I did some private lending while I was flipping and worked on that. And then went into multifamily and stayed on that. Now, what I'm doing is I'm building an online platform for real estate investors because I feel their pain with all of these courses and workshops and seminars. And, it's hard. It's hard for anybody to, one, know where's the good content, two, where's the good investment, because when you're buying, this is one mistake that people make is they're buying you're not buying a course, you're investing. And you should look at it as an investment. How are you going to get your money back, right? So have a plan with that money that you're going to actually commit to doing that strategy to get your money back. So people that are wanting to invest in themselves and invest into these courses and these platforms, there's just where do you go? Like, how do you know where's the good content? How do you know it's the right fit for you? All of that. So what I'm doing is I want a one-stop shop for everybody.
Okay.
Come in, we're going to have mindset. I'm going to have 8 core strategies. The biggest thing is when you first start out in real estate, and not even just when you first start out, because this is actually applied to investors that are pivoting as well. It's like, okay, this isn't working for me anymore. Now where do I go? Then there's so much out there. So I have a program. It's called Reverse Engineering Real Estate.
Oh, I love that.
Yeah. And so what it does is it brings people in and starts to helps them identify what is the right strategy for you based on certain criteria. And so I help them figure out what is the right strategy to set you up for success. And then the platform, the core program is going to have 8 core strategies. So we're going to dial in the top 2 strategies for you. Pick one, go learn it. It's online. We're going to help support you through it. At the same time, once you start, if it's not resonating for you, ditch it. Again, it's not failure. It's pivoting. And so don't try to fit a square peg into a round hole. It doesn't work. So if that strategy isn't resonating for you, do the next one that we identified and then learn it, and then we'll help you through that process. And then the beautiful part about what I'm building, and this is what I'm really excited about. So when you buy an online course, it essentially tells you what to do. It doesn't tell you how. So a lot of the coaching that I do is always like helping people on the how. This is how you do this. This is how you do that. They know what they need to do because they learned it online. Honestly, the strategies that I'm going to have, the core strategies, it's all going to be online. Like you can get that information through podcasts, through YouTube channels. Like it's there, right? But it's the how, it's the nitty gritty. It's the experience that we have that other people don't know. Like for example, when I started in flipping, I didn't know. Didn't know to ask or confirm with my mortgage broker that it was a variable rate. He put me in a fixed rate. He knew I was flipping. That's the frustrating part. But at the end of the day, it wasn't an investor-friendly mortgage broker. So he didn't understand my strategy and didn't really understand or didn't want to take the time to understand it enough to put me in the right mortgage product. So ultimately, I ended up having to pay a lot of money in order to break this mortgage. So those are the things that we're going to have in our deep dive vault. So when you're going to get a mortgage for a property that you're buying, watch this deep dive into getting financing. And so that way, when you're sitting down with your mortgage broker, or maybe it's private lending, you're sitting down with your private lender, you know what all of the nitty gritty of things are. So you understand what the clauses are. You understand what you should have in that mortgage document. So people don't understand it. So I'm going to walk you through all of that. And I'm so excited about that because that's the missing part that people don't get. You can get everything else. The what is out there, not the how.
I love that. So you're moving into the education space.
That's what I'm doing. Yeah.
Awesome. Because then you know what that'll do for you too? It'll
me.
give you geographical freedom. Because you won't need to be here. You can teach it wherever you want to be in the world.
So Gary, do you remember that conversation we had a little earlier about choosing?
Yes.
And doing things with intent?
Yes.
100%. So this is all part of my children are teenagers now. I've got a couple of years left. And then I'll be able to I won't be needed as home the way I am now.
Yeah.
At home as much. So I'll be able to, and I love traveling. So it's one of the things that I love.
So then you'll be in Mexico with me.
Yeah. Honestly, I am not opposed to that idea at all.
Awesome.
Not opposed to that.
Awesome. Danielle, listen, this has been fun. It's been great getting to know you better. Man, it was a great conversation. I really enjoyed it. I think people will as well too. Final tips, final advice, and what's the best way for people to get a hold of you if they want to learn more about you and what you're building and what you're growing with your education company?
So if anybody wants to reach out to me, the best way would be to go to my Instagram. My DMs are open. So shoot me a message in Instagram. On my Instagram profile, I also have a link tree. So for those of you doesn't know what a link tree is, it's just a link that takes you to a web page that has what's going on and what I'm up to. So you can see everything that's going on there. You'll have a link to the multifamily conference there, any workshops that I'm doing, that sort of thing. And so that's the best way to contact them. Now, as far as, a tip.
You're going to be there as well. I didn't know that. Awesome. Yeah. You're going to be sharing the stage with, Grant Cardone. Mm-hmm. Actually, I just interviewed Seth Ferguson not too long ago.
Yeah, he's a good guy. He's a good guy. I love Seth. Yeah, so it's going to be a lot of fun. Actually, the multifamily conference. So I want to tell everybody who's out there, if you're listening to this podcast and it's resonating with you, come. I'm going to have a booth there in the exhibitor lounge, and come say hi because I'll be around. Yeah, you're right. I'm going to be on stage too. And I'm just going to have so much fun. It's just going to be a party that weekend. It's just going to be so much fun.
May 26th
to the 28th. Yeah.
All right. So we'll have to make sure this drops before that date.
Yeah. So I'm super, super stoked about that. And again, this is what fires me up. Coming back to the beginning of our conversation, you need to find what excites you, that brings you purpose in your life. Again, I'm going to come, just back to the mindset stuff. Sorry. I love mindset stuff, but I firmly believe those people that are going to the seminars and they're not quite sure and is because you're lacking purpose in your life. Anybody who has they call it a why. People are like, what's your why? For me, I call it a purpose because I don't identify with the why. My purpose, what is my purpose? What fires me up? That fires me up. Doing the houses anymore didn't fire me up anymore. So I kind of outgrew my purpose. I outgrew my why. And now I have a new why, and that's okay. And so you just have to go, okay, what fires you up? and listen to that. You said it, Gary. Listen to your gut. So what it is, like, listen to your gut. If something's not feeling right, make a move. Make a move.
I'm so glad you said that, because I'm the same way as well too. Like, me hunting and looking for investment properties, it just doesn't fire me up anymore. I'm not against it. It just doesn't fire me up. I love educating people. I love doing these podcasts. This has been one of the best journeys I've ever been on. You know, you want to get to this point of you hate going to bed and you love waking up. That is when you know that you're actually really, truly living your passion and your dreams.
I love that, except I really love my sleep. So
well, get your 8 hours in then, and But listen, Danielle, awesome hanging out with you. We're going for lunch now, aren't we?
Lunch, yes, let's do it, and vino.
All right, let's do it. I can't wait. I can't wait to do this. And man, thank you so much. I really appreciate it. And we're going to do this again for sure.
I would love
and I would love for you to come out and even do a talk to our group as well too. I think it'd be a lot of fun.
Yeah, let's do that.
All right, we will. All right, Danielle, thank you so much. I appreciate your time.
Thank you. It's been an honor, Gary.